into this 40 minutes of, I guess, a lot of disruption, right? So we're going to talk about that. I think very quickly, rather than I waste any more time sort of introducing the session, which is quite self-explanatory, firstly, thank you to the summit itself, DIFC and Trescon to have all of us. So the way we'll do it is I'll request my sort of esteemed panelists to introduce themselves, and then we'll sort of roll out into a dialogue about the topic. So Varun, can we start with yourself?
Absolutely. Thanks so much, Arjun. Can you guys hear me? I think the mic is audible, right? Yeah,
it's
perfect.
Good.
Thanks so much, Arjun. So, hi, I'm Varun Malhotra. I'm based in Bangalore, and I head Asia investments for Quona Capital. At Quona Capital, we're a pan-emerging markets early-stage fintech investor. We focus on fintech for inclusion. We do believe in the power of fintech to drive catalytic change for underserved segments. We invest in the early stages across the globe. We have about 75 active portfolio companies across 14 different markets. And we're super excited about the prospects of fintech going forward. I think this vintage is going to be fantastic, the kind of innovation that we're seeing on ground. And this spreads across the entire breadth of our markets from Africa, MENA, Latin America, South and Southeast Asia. So super excited to be here.
Welcome.
Thank you.
Alain.
Thank you. This is Alain Baron. I'm an equity partner at Mirabaud Group. Mirabaud Group is a traditional private bank founded in 1819. It's a 205 years old bank. The seventh generation of Mirabaud family is managing the bank today. We are spread in 4 continents, starting from North America, South America, Europe, London, and the Middle East. We've been based in the Middle East since 2006. And in Dubai and in Abu Dhabi since 2019. We give our clients traditional private banking, but of course, the future that is in the fintech today and the technology is a very core business for us that we are looking for, and we are looking for to build it with people like our colleagues today. Thank you.
So my name is Victor Fischer. I'm the founder and CEO of Rockaway X. We manage roughly $2 billion. We are exclusively focused on crypto and digital assets, sometimes called here virtual assets. And before founding Rockaway X, I was with McKinsey & Company, another consulting firm. And very grateful for DIFC because we are actually establishing Rockaway X here in this region as well.
Thank you. I do love the name Rockaway X.
I love it, especially the X at the end. Sounds like SpaceX, Google X,
Charles,
Metaverse,
please.
yeah?
Thank you. So my name is Charles-Henri Monchau. I'm the CIO at Banksys, so coming from the same fields and same country than Alain. So Banksys is a Swiss private bank boutique, a very young one, created back in 1996. We manage 25 billion assets under management. We offer traditional wealth management services, so discretionary advisory. But our motto is for the future, and among, let's say, the futuristic type of investment services we offer, we are one of the very few Swiss private banks to offer digital custody and digital assets custody and digital assets trading to our clients. And we also launched a fund of crypto hedge funds last summer. And just to add that I'm very pleased and impressed by Dubai Fintech. I think it's outstanding events. And just shows, all of the leadership and innovation that we can find here in the UAE. So very impressed.
Excellent. So welcome to all of you. Varun, I'll start with you, right? I don't know, for the last 2 years, quarter after quarter, we're still finding the pit as far as investments are concerned, right? Every quarter we feel things are going to turn. Every quarter we see the numbers are lower. There's arguably greater concentration of investments happening with a fewer sort of bigger mega deals. Let me just open it up with saying, from an investor's perspective, which sort of fintech subsector, sector trend are you guys most excited about? What do you think has this ability to possibly give us this upswing in the future?
Sure, absolutely, Arjun. And this quarter is it, by the way. This is the quarter where we see the dip, right?
This is the quarter it's going to change?
All right, okay. On record.
That down, guys.
But no, I think we've started seeing a lot of movement in the market. Just to kind of take a step back, of course, the last 2 years have been a little bit quiet on the investment side as far as fintech is concerned. But since the last year, or last 2 to 3 quarters, particularly in the markets that we operate in, which are all emerging markets, we're seeing some fantastic deal flow. We're seeing some great deals happen at the seed stage. In 2021, in the hype of the cycle, we did see the top of the funnel expand. We saw a lot of talent jump in to tech entrepreneurship overall, but particularly in fintech, and there was funding to kind of support it. But as that dried down, I think there's a fair bit of seriousness to the entire endeavor of entrepreneurship that's taken a different meaning. So from that perspective, we're seeing the most phenomenal quality of founders starting up at the seed stage right now in the fintech space. So we're very excited. We're open for business. We've been backing founders right through the last 18 to 24 months. And even on the growth equity side, as a calibration between business metrics and valuations, because multiples have changed over the last 2 years. But as we see that congruence happening right now, we're seeing deals moving. So this year we expect to see a lot more action than last year. So that's my take on where the market is headed this year. As far as the sectors are concerned, again, we invest in emerging markets. There's so many problems to solve. The entire infrastructure has been broken, or pieces of it have been broken, for a really long time. So we're seeing a lot of founders come up solving infrastructure problems, building connectors, building blocks that join one bank or banking institution or financial institution with distribution platforms. So that's a theme we're very excited about, banking as a service. Even within InsurTech and WealthTech, we're seeing more infrastructure plays pop up. Because over the last decade, I think the governments have spent a phenomenal amount of resources. There's been a secular policy push to lay the foundational rails or the building blocks for fintech to happen. Right? We were talking about UPI earlier. Pix is launching in Brazil. We're seeing similar real-time payment systems emerge in this part of the world across Southeast Asia. All of these things, and there are many more innovations similar to UPI that are also that have also been built. So now we're seeing the infrastructure layer sort of building on top of that, connecting the different disjointed pieces. And I think that's going to lead to a lot more consumption of fintech services, really at the point of where consumers interact with their daily lives, whether they're retail, whether they're institutional, whether they're SMBs.
Okay, so I'm going to take two themes out of it: infrastructure, connectivity. Alain, if I take that theme of connecting traditional finance, and you know traditional finance better than, I guess, well, most of us on the table, or most of us on the dais, how do you see fintech, and where do you see the synergy between fintech or new tech and traditional finance?
Yes. Before I think we speak about the synergy, we need to identify...
Alain, just make this a little
sorry.
closer.
The traditional finance. Traditional finance is not something that is doomed like dinosaurs. Traditional finance, it existed 300-400 years ago. And with the evolution, they overcame world wars, big financial crisis, and today they exist, they still exist. This existence shaped our economic landscape, regulations, and policies where we act today. The fintech, or the technology that we are talking about today, is a major shift that all the traditional finance is today facing and need to be accepted. So basically, take into consideration like a bank of ours or Charles-Henri, the C's bank, we see fintech, and I'm sorry, I'm talking on their behalf, but because we are in the same financial institution and financial regime and system in Switzerland, we look at fintech in two angles. First angle, we do invest in fintech and in technology in our main business to evolve our business, and this is very important for us. Second, we look at fintech and technology as a way to evolve our strategy offering of our investments, and this is very important for us. So today, each and every bank is offering technology in biotech, agri-tech, AI space, digitalization, blockchain. So if you look at this and what's the technology bringing into the table as the word disruption, and we were laughing about it, but the innovation disruption, if you look at it, it was created by a gentleman in Harvard, 1995. It's not something that we are creating today. It's created way before. So I see more complementary in the two worlds and not synergy. The banking and the traditional finance bring the knowledge, as we spoke, the knowledge of the economic landscape. The technology brings the disruption in order to evolve the business of the traditional finance. Without that, we will not evolve. Blending both of them, I think we will make the future, we will shape the future, and we will be able to help the fintech and the technologies in order to maneuver and guide them in such a landscape of regulations and tightening regulations that we will speak later on, in order for them to be able to provide us better products and better environment for the future. So blending both is the solution and not the synergy is the solution.
Okay. Victor,
if I can, because it's the same field, so if I can just add, what Alain had on what Alain mentioned. So you mentioned a very important C, which is collaboration. I exactly see this in the same way. So indeed, it's not banks against fintech, it's banks and fintech together. And I look then at other C's when it comes to priorities, which fintech to collaborate with. And the first one is customer focus, because that's the bread and butter of our business, is staying very close to the customer. So which solutions are going to help us to be more centered, even better with customer? The second one is customization. Nowadays, clients, they want customized products and services. And as a bank, very often we lack, let's say, the IT, the innovation to do that. And many fintech provide this. The third one is C of cost efficient. Everything is very expensive nowadays. So if you can benefit from those actors helping to keep, let's say, costs low, that's great. And the last C, which is super important for our business, is compliance, because anything we do is, let's say, based on regulation. So we need also to find fintech partners which are, helping us to stay, within, let's say, the boundaries of regulation. So these four C's, they are super important, and as many, let's say, fintech we can use to, deliver on this, that's great, and that helps the C of collaboration, as you mentioned.
So Charles, I'm going to come back to you on a collaboration question, and it's going to be actually quite a pointed question, so hold that back, but let me ask Victor. Victor, you're a Web3 crypto investor, right? And which means you are not only disrupting traditional finance, you're out there to disrupt even fintech, right? What's your reaction to what's been said so far?
Yeah, I would say, let's take a look at market sizes first, yeah? So I looked this morning, $30 billion are invested per year in fintech startups, 10 billion in crypto startups. So we are 3 times smaller than, our neighbors here. However, the total market cap, valuation of all, fintechs is around $3 trillion. 1.3 is private, remaining is public. And on the digital asset side is a bit more. It's 2.5 trillion of already traded digital assets, plus 500 billion of Coinbase and other public companies listed. So less investments into a similar size market. So for us it's good because there is not so much competition, so we can earn basically more returns on the upside because the valuations are lower. Number one. Number two, to answer your question, which use cases I am most excited by? Let me give you a couple of examples. So number one is stablecoins and payments. There is around $150 billion of stablecoins, which means dollars on chain. And if you look at there is a new dashboard created by Visa called visaonchainanalytics.com. Take a look at it, visaonchainanalytics.com. Actually, every month, $2.4 trillion are transacted in volume on stablecoins. Stripe transacts $1 trillion per year. So in digital assets, we do per month twice as much as Stripe does per year. Yeah, so again, there is, some people say hey, no use cases of crypto. No, there are actually use cases. Concretely, I had my birthday in February. I was here in Dubai, wanted to rent a small boat. I didn't know how to pay the provider of the boat. So on WhatsApp, we just said, hey, I'm going to send you some USDC on Solana. They accepted it, and we just transacted immediately at no cost without the banking system. And there are other examples in terms of lending, for example, lending, borrowing without lawyers, without banks can be done immediately on chain. Companies like realty.co allow you to invest into real estate, tokenize real estate in the US. KKR is tokenizing their healthcare fund. BlackRock is also tokenizing fixed income products and treasury bills. So those are the use cases I'm most excited by.
Okay.
Next year, sorry, you should invite me to your birthday. I have February. Yeah. I'm born in February as well.
Yeah,
Happy birthday together.
I'm 14th. Which February are you?
3rd.
Third, okay.
We will,
We can do a 2-week celebration.
Yeah.
with Bitcoin involved and all of that. Charles, coming back to you, you use the word partnership between sort of traditional finance or incumbent players and fintechs. Do we really see partnerships, or is it more like banks saying, do this for us, we're the masters, you're the servants, right? Do you see equal partnership? And if I may actually just extend that question, the theme of our discussion is investment opportunities through disruption. So are we saying that the fintechs who are playing this subservient role to large banks and being fintechs for banks are the ones we should be looking to invest in?
Okay, so there are two questions. Well, the first one, well, I can give you a, let's say, a precise example, because I think it will cover your two questions in just once. So as mentioned earlier, so we are one of the very few Swiss private banks to offer to our clients digital assets custody and trading solutions. So how did we do that? So first we took the decision 3 years ago to go ahead, and two, we needed to select a partner. So we selected a company, a Swiss company called Taurus. By the way, they have a booth here at Dubai Fintech, because we needed to find someone to provide these, let's say, digital votes and all of the infra, which is behind. So the good thing is that also they are FINMA regulated. So that means we are regulated, they are regulated, so that also helped. And they really enable us to offer this service to our clients, with reasonable costs and effectiveness, because indeed it works. So clients can buy Bitcoin, Ether at Banksy's, and they will see the cryptocurrency showing up on their bank financial statements exactly as Microsoft or another stock will show up. So that's, shows you one example of true partnership, which works and which was beneficial for us. And two, can you invest? Yeah, well, it's a VC. It's a VC. They went through some VC rounds. There was a seed investing possible and all of the series. So it was possible to be an early investor, and this is some banks and other investors did it. So you can do both. You can use them as a partner, and two, you can indeed consider them as a partner. And the great thing is that to, let's say, make things even more exciting is that through tokenization, it's becoming easier and easier for investors to invest alongside the big investors without having, let's say, all of the financial let's say, a magnitude to do that kind of investment. You can invest into UT token, you can invest now in security tokens. It's coming. In Switzerland, we have the DLT law, which is enabling this. So that means that not only you will be able to find the right partners, but you will be able to be early investors into these very promising companies.
Victor, anything to add?
Yeah, KKR tokenized their fund, reduced minimum investments for $5 million to $50K. So basically, tokenization allows to reduce the barrier of entry. Number two, it also creates a potential for a secondary market. I would love to tokenize my VC fund. It's a 10-year fund. Investors are locked for 10 years. Some of them would like to exit earlier, with the 5-6x times of money we do. And if there was a secondary market of tokens, they could just very easily sell their position.
Varun, let me come back to you, right? We'll come back to a little bit sort of more traditional fintech investment, right? So with everything you've heard, I think that I still have that question which is outstanding, which is, are fintechs that are serving traditional finance companies better to invest in? Is that a part of the investment thesis which is emerging? Are fintechs which are playing the infrastructure game more investable in the current environment? Or am I making no sense out here?
No, you absolutely are. I think, we have been tracking the enterprise fintech space, so to say, right? Who are serving the BFSI clients, whether insurance carriers, asset management companies, or banks, for a while. We see that change happening now, where the relationship dynamics are shifting, right? Because I think banks are also under increasing regulatory pressure to comply. It's not an option for them as they enter into this new world of partnerships, working with multiple players, whether they're traditional or tech-led players. So from that perspective, I think the solutions to a lot of these problems, and a lot of these problems are recent. To give you an example, if you look at the card payments value chain, it was developed over several decades in markets like US or Europe. Every player's role, monetization, revenue pools are very, very well defined across the entire value chain. Who takes care of chargeback, who takes care of onboarding, who takes care of real-time processing of some of these payments. When you take a technology on the real-time payment side, it's instantaneous. We're transacting 5 cents, as low as 2 cents in every transaction. There's 6 counterparties involved. Once your money is gone, it's gone. There is no concept of chargeback. And people across emerging markets are very creative and ingenious. And that creativity also extends on how do you defraud the system? How do you work on these little loopholes? Because once the money is gone, it's yours. It's whoever holds that currency, right? So for problems like these, we are looking for indigenous solutions. And these are going to come from homegrown fintechs in a market, right? So we see that relationship, that understanding, that recognition from traditional financial services players to say that, hey, there is credible value being developed in fintechs. That mindset is setting in. And as that sets in, I think the revenue models are going to also improve. You're no longer going to be just service providers to banks, but you're actually going to be product partners. You're co-creating, you're co-building newer processes and ways of doing business. And that's where we see the opportunity. So we made an investment in this company called Bureau.id based in San Francisco in India, and they're expanding into the region as well. While the use cases were developed for the South Asian market, the regulators in the MENA region love this product because we're avoiding onboarding fraud, we're avoiding phishing, SIM binding, different kinds of frauds that are more ingenious and more local, but export across emerging markets and very seamlessly. So for these kind of fintechs, we're seeing a lot of promise out there.
Yeah. Alain, let me try and connect the dots and sort of put you in a question. So, you guys have a massive legacy, in private banking, in traditional finance, right? We've heard Victor talk about, tokenization of VC funds, but lots of things can be tokenized, right? And hopefully will be in the future. We had Charles talk about the fact that they're offering access to digital assets, access to, I guess, the new age of finance. How are you guys evolving, right, in terms of your investment strategies with all this stuff going on? How do you lean on third parties any differently to bring this to life?
So we're not that different from C's
Okay.
strategy. First of all, we need to understand that we are witnessing today a shift, a huge wealth transfer, or the greatest transfer of wealth between generations.
Yes.
And this is a big challenge that you are facing. And the speed of that change is creating a gap between the two generations that the wealth is being transferred. And this for us is a huge challenge. This is why we embrace now the technology and we embrace all of these things in order to respond to the needs of our new generation clientele. But to go back as well into history, because we always speak about traditional banks and traditional finance. Back in 80s, 50s, the bank Mirabaud has been one of the founders of the Swiss stock exchange. 1970s, we launched our first hedge fund back then, and it was one of the first in the world. So basically, to absorb technology and absorb innovation is not something new for traditional banks. And I'm sure many other traditional banks have the same stories. But today, as Charles-Henri mentioned, we depend on 3 strategies. First, and this is the utmost strategy, is that we invest the technology in our business, and this is very important. Second, we offer it to our clientele through partnership. We made a partnership with a Swiss digital bank regulated by the FINMA called Signum Bank. I'm sure that most of you have heard of it because they are based now in Abu Dhabi. So 4 years ago, we did it. We didn't launch yet the activity because we are doing a huge transformation in our IT system. So we are waiting till end year in order to adapt this offering to our clients. But the platform is there and everything is there. Just we need to press the button and start offering the digital asset to our client. And third is the most important today for young generation and the old generation, direct investment. We do a lot of direct investment in the VC world, in the fintech, AI, biotech, agri-tech, and this is very important. We accompany these entrepreneurs and we raise money for them, we coach them, we support them, and this is how we blend the two worlds together.
Okay, very interesting. Victor, your world comes with certain risks. It comes with all kinds of news. It comes with all kinds of scandals, right? How are you guys actually sort of balancing this cutting edge innovation, right? Still staying semi-regulated and you know, keeping your act clean?
Yeah, I would say, look, traditional finance is also full of scams. If you remember, credit cards were created in the 60s. The first use case was fraud, yeah? Today you travel to the US, you pay with your credit card, and then you come back to either here or Europe, and then, you know, someone like with mine credit card was actually buying like tires for their car, yeah? So, unfortunately, when there is money, there is fraud. But, you know, I think it's improving a lot. Of course, there's like Celsius, Trieros Capital, FTX, and, you know, these like bad players are being punished, you know, like SBF, Sam Bankman-Fried got 25 years of prison. I think it's good. What we search for in entrepreneurs when we interview them before we invest is integrity. You can actually check it, you know, using the CV, you can actually check it through references and it's a big part of what we do. But I think there is a fine balance from a regulator's perspective, how to do it. I think how the US is doing, especially the SEC, is wrong because they are, you know, 4 years ago there were 40% of blockchain developers in the US. Right now it's only 20 because they are moving. They are moving to Europe where the regulation is clear, and they are moving here because the regulation is clear and is very much supportive. And on the other hand, you know, FINMA is a very proactive regulator, and it's very clear in Switzerland what is a security token, what is a utility token. Because an entrepreneur, what does she want? She wants to build her business as soon as possible and not go to jail. Just those two things. And the regulator needs to support those two things.
Charles, your reflections on this? You guys obviously are from Switzerland. There is this trust trademark which comes from the part of the world you are. You're obviously in the cutting edge of offering, you know, an asset class which is still, I guess, you know, debatable. How are you guys operating?
So, well, I think that generally speaking, when it comes to fintech, there are two elephants in the room. The first one is, you know, we just discussed it, blockchain, and indeed, you know, we are getting equipped on this, not just for the, let's say, the cryptocurrencies that we all know, but as mentioned, the security tokens, utility tokens. But the other elephant in the room is artificial intelligence / machine learning. And here, there is indeed a sense of urgency, like in any industry, at least on two counts. The first one is advisory services, so advices we give to clients. In the coming years, the new competition is going to come from the Facebook, the Amazon, Google of this world. Facebook knows everything about your wife, you know, your kids, your own preferences, but actually probably know already if you like structured notes or not, or if you like US stocks, European stocks. So that means that we'll have to compete against that kind of newcomers, which means that when sending advices to clients, we need to know exactly what these clients, you know, want. Otherwise, you know, they will just skip, you know, what we sent. So on these counts, we need indeed some fintech tools, but obviously AI is going to be of great help. So that's, you know, urgency to integrate that. On the other one, investment management, to make it simple, the way, you know, when you manage money, basically you collect data, you analyze data, and then you need to take a decision with a tool or not. This has always been the case. A few decades ago, we had Excel. Anyone, you know, who didn't use Excel were probably lost, but it doesn't mean that you use Excel that you're going to make some alpha, generate some alpha. And this will be the same question with AI. So we need to be sure that we have access to the best tools to take the best investment decision, but obviously, you know, with some kind of, let's say, human decision, you know, above this. So these are two, on our side, the two priorities, so blockchain and integration of AI within our processes and solutions.
So firstly, congratulations to all of you. You survived 30 minutes without using the word AI, which I think they were an ovation for. But gentlemen, we've got 10 minutes. I do want to give you guys 2 questions each. What I'm going to do with the next question is, it's an open question for all of you. We talked about regulation a little bit. You know, generally the trend, while the regulator is actually definitely getting a lot more smarter and progressive, but with progressive and them being more aware, there is an element that things are getting more regulated than in the past, right? Again, I'm sweeping statements out here, right? How do you see investors and startups adapt to this environment? And is your position that this level of, or expected level of regulation is going to start stifling this innovation?
Yeah. No, look, I mean, yes, fintech only investors, this is the world we operate in, right? It just comes with it. Having said that, the regulation, as human beings, we oscillate from overcorrection to overcorrection. There is never any steady state or a happy medium in the middle, right? So we've operated an environment where the regulators, by and large, were happy for innovation to happen in these sandbox environments and these, at a smaller scale. As the companies, as the fintechs get larger, I think there is an overwhelming pressure to start regulating, which is not all necessarily bad. I think it's more about how you implement the regulations rather than what you're implementing. On the what itself, look, again, as fintech-only investors, this is all that we do. We only invest in fintech companies. So it is our role as investors, as board members, as partners to our founders to guide them very early on. So right from the outset, we take that responsibility very seriously that, look, if you act like a financial services company, if you look like one, if you smell like one, you probably are one. You can call yourself a tech platform, but you are in the business of financial services. So, governance, having the right committees, having the right spirit of the regulations, understanding the spirit of regulations is super important, and that's a mindset. And you need to ingrain that from the early days itself, rather than wait for the regulator to come after you. So we believe a lot in self-regulation. We believe a lot in a path to getting licensed or getting regulated, even if you don't fall under the black and white current regulations. And we believe a lot in working with the regulators and educating them, because there's no way in hell that regulators are going to be totally up to speed about the latest innovations that are going on. So it's our responsibility as an ecosystem to kind of educate them.
Gentlemen, 1 minute each for the rest of you to answer that question. Sorry, I've got to...
Thank you. I cannot agree more with Arjun and Victor. Victor mentioned something very important. She wants to build her startup without going to jail. Arjun said about support and monitoring and coaching. So today, we live in two different ecosystems, the traditional finance and the fintech. One goes with the reverse path than the other one. Our role is to support the fintech people. Our role is to guide them through this landscape that I spoke before about it earlier, about the landscape, economic landscape, regulations and policies, and to try to let them focus on their business instead of focusing on working with the regulator day and night. We did this for the past 300 years, and they learned a lot from us regulators, and they find us. It's common practice. However, today we need to support the fintech world, and the fintech world need to be surrounded by experts in order to navigate them through challenges and preempt risks. More you preempt, better the result will be. And today, regulators and fintech, they need to accept it. They cannot live without each other. Fintech is the future. The regulator will always survive if the fintech survive. So we need to collaborate. One should be more flexible, and the other one should accept that there are regulations, there are frameworks. We need to put them in place, and we need to work based on that.
So who gives in first? Victor.
So just 2 words for regulators. Be open and be clear. Because regulator, in my mind, has 2 responsibilities. Access to banking system. If I'm a crypto founder or digital assets founder, I want to be able to open a bank account. I saw some countries, they prevented crypto founders to open bank accounts or to have mortgages. This is wrong. So on the banking system, be open. Of course, with KYC, AML, but be open. Second is protect the consumer as an investor, and there be clear, what are the rules for my token offerings? Is it a security token? Is it a utility token? How do I actually can do marketing? So just 2 words, open and clear.
Charles.
Yeah, I'm going to shock you. The regulator is our friends. For one of the reasons you mentioned, because indeed they protect customers, but also if we are able to work alongside a regulator which is competent, it creates economic moat, because that means that competition will not, let's say, be at our level if we are early on the process. So, like my colleague Valérie Noël works, with the regulator on the digital assets custody and trading. The more the regulator understand what we do, the more they help us to build this offering, the more we are advanced compared to the others. So I think there is this bad tendency of always seeing the regulator as an enemy. Actually, if they are good, if we work together with them, it's definitely a friend.
Agreed. So gentlemen, 30 seconds, one question each, because I want to leave 2 minutes for the audience to ask any questions. Varun, one trend investors should not ignore today.
Climate and fintech, the intersection of that. I think there's a massive, massive momentum and need for climate-focused businesses. And I think fintech plays a very important role in writing the new risk paradigms for the assets that are coming up. And I think they need to be written for this particular segment.
Great. Alain, critical risks which investors should consider when entering the fintech arena?
Yeah, each investor should put a framework in front of him. Due diligence, market intelligence and market knowledge, and investment rationale. They need to understand the product. Charles already mentioned it about the C's. They need to understand it. If they cannot understand it, the investment will fail. And the last is once they identify these 3 points, I think understanding the entrepreneur, his mindset, and the operational challenges that he will face will be solved, and the success will be higher than a normal success. A framework.
Victor, I want to invest in a Web3 startup. What's your advice?
Look what your kids are doing.
Okay.
Because I have one investor. He has a 12-year-old daughter. She spends all her pocket money on buying, like stuff on Roblox. And he was like playing with her, last week and then this week on Roblox. And she was like, Daddy, you cannot wear the same shirt in the game, like across 2 weeks. Because her classmates would see it in the game. And so, look what your kids are doing, and they spend most of their time in digital assets.
Charles, we can't use AI. What other emerging technologies do you think is going to change this world of investment practices?
Well, beyond AI, well, as mentioned before, I think this tokenization is going to really move the world from stock exchanges to asset exchanges, and we did see already some live examples. Even for those who are, let's say, in the 60s, 70s, when they see, let's say, a true company or a true asset like a real estate, and they understand that they can have a digital certificate on it, they really want to invest, they really want to embrace this technology, although it's new. And by the way, it's a win-win, because for a bank, what you don't want is to see assets leaving the bank to invest into a private company or real estate. Here, with digitalization, actually the assets stay in the bank. So you offer a nice product to a client and understand, and on top of this, you keep the assets with you.
Charles, but I do have a question, right? There's more written about tokenization right now than actually point a finger at, right? So what's actually holding tokenization back? Is it just regulations? The regulators haven't made it very clear? The technology doesn't exist?
No, it's coming. And I just want to give, let's say, one example. It's a sad example. So 3 weeks ago, there was this attack in the region by Iran, and there is a token on gold. And this token on gold hit $3,000 on Saturday evening. 3 days after, I don't know if you saw in the FT, they talk about 24/7 trading, because they understood that because tokenization is coming, they will be forced to adapt traditional markets to be able to compete with tokenization. So this very single fact, and it was a headline on the FT, means that even, let's say, TradFi knows that tokenization is coming.
Crowd, 4 fine gentlemen, any questions? I can take 2. I can't see anything, so if anybody is waving a hand,
over there,
please, go ahead.
Oh.
My question is to Victor. This is Prateek Bagaria. I'm a lawyer focusing on BFSI, fintech, crypto disputes. And you mentioned that, crypto is not doing, we should not look at the bad apples of crypto. And you took a few names, FTX, Capital, Arrow. But when you look at the larger scheme of crypto companies today, the Coinbases, Binance, Gemini, and the list goes on, right? You pick up an SEC charge, or you pick up a charge by any regulator in the US. Most of the top, cream de la creme companies have been charged by crypto. Do you think it's the problem with the crypto industry is that it considers it outside the fintech industry? Is that the problem, because they want to defy always and not comply with regulation? Or do you think the regulator is not clear about it?
I think the regulator should be proactive and not, ex post just punish the companies to try to fit them into some kind of framework. FINMA in Switzerland was extremely proactive. Yeah, like already in 2018, they were creating like the first laws. Right now they have the DLT law. So that's my strong recommendation. Just be proactive versus ex post try to punish the companies.
Last question, guys. We run out of time, but I'll take the liberty. Anyone? Okay, please go ahead.
I think, Victor, you're discussing about, good to see your kids, what they are trying to do, and then invest on it, which is great. I think digital assets and gaming and all is great. But do you think if we go too much more in this, we are leaving the real economy, agriculture, many things which is really the humanity, they need more than this digital asset, which is not tangible actually. And then we try to put our money there because we make more money and so on, and we are leaving really the real economy behind.
Yeah, that's actually a really good question. I think in digital assets, we have to improve. We have to improve the user interface. My father is a professor in cryptography. He doesn't use digital assets because he doesn't know how to. It's still very complicated to onboard users. And maybe that's why, the digital assets plus fintech plus TradFi can help, because we can work together. You guys will serve as user interface for me doing all the back-end work.
Gentlemen, thanks a lot.
Thank you.
Varun, Alain, Victor, Charles, coming to see you guys in Switzerland. I'm getting a boat ride with you. Varun, I'll see you again in Bangalore. Thank you all for listening in. Please, an ovation for our 4 panelists.
Thank you.
Thank you very much indeed, Jim.